So this morning, we are going to be talking about the diving deeper into the market structure. Then one of the things you all will learn is you'll be learning the confirmation checklist. Are we together to identify what an higher high is and what an higher low is? Then this is something that will really guide you so much. And then to enhance your trading journey in a very, very phenomenal way. So this is going to be the phase 2. And then I told you all that the phase 2 basically has to do with entries majorly. Entries. So for the next 3 to 5 days, we are going to be dealing with entries. And then if you have not mastered the phase 1 very well, are we together? I would just advise that you go back to it and watch it and understand the process. This is the phase where, like I said, the interest in you going into a particular asset will start, we start maximizing. Do you understand what I'm saying? Like, for example, if you want to go into the currency pair and you want to stay there and understand how the market moves, majorly all these things happen, they happen on whole market phase. Do you understand what I'm saying? This is a phase in which if you will be going into, the volatility, and also the currency pair is fine. But majorly what we'll be trying to achieve in this phase is to make sure you all understand the market, to find high probability institutional candles, the high probability candles that you cannot do without. Candles that when you see them, the chances of this candle giving us our risk to reward on a very high standard is on the high side. What you all will be learning on, the identifying the buying opportunities, what constitutes a buying opportunities, what constitutes a selling opportunities. I'll be teaching you all about the currency pair, like most of, especially this one, these buying opportunities. I'll be teaching you about sections of, sections. What I mean by section is that I'll be teaching you about the London section, what to do, what smart money does in the sections of, of the day. For example, what they do in the London section, what they try to do in the overlap of London and US section, also the Sydney section and the likes like that. So you understand what I'm saying? So if you will be loving currency pair, this is what would really, inspire you. The concept is the same thing over and over again. It works for volatility, it works for currency pair. But today we'll be talking about structure again. Are we together? Structure. If you have your biro and your pen, because I'm going to be saying some things, and then trust me, I want you to pen that down, even though you would also be checking it again, in the recorded videos. We're together. Structure. We'll be going deeper into structure. And then this morning, what I'll be teaching is the confirmation checklist. Are we together? The confirmation checklist that we use to identify a trend. I said something yesterday, like, for example, if you see a particular trend, or if you see a particular higher high, you understand what I'm saying? There are some things that really make up for that higher high, that makes it an higher high, and what makes something an higher low. So the first thing you all will be getting to understand is that not all higher low can be seen as an higher low, and not all higher high can be seen as an higher high. So under this, we're going to be talking about the market structure and time frame correlation. And then you can all, let me just write this, validating and higher low, validating and higher low in a bullish market. Still the same thing that I taught you, but this is more deeper in the bullish markets. Now, the first thing you want to note when you see your trend. Now, let me draw this. I'm coming. Now, this is a bearish market, right? Now, look at this family. Right? This is a bearish market. And then one of the constituents, what constitutes a higher high is that we want to see a candle close above this, right? Good. So the first thing you want to notice that we validate an higher low. What I mean by higher low is this place, right? Is that I hope you are writing. I want to see two bearish candle close. That's the first confirmation. The first confirmation that you want to use to validate that this is an higher low. You want to see two bearish candle close below the last bullish candle. I will explain it very well. I want to see two bearish candle close below the last bullish candle before the retracement. Now, what does it mean? What it means is that we'll go to the live chart. If this is the first bullish candle, let me make it green. For us to note that this is a valid higher low, okay, it's correct. The first thing I want to see is two bearish candle close. Are we together? Below the last bullish candle. Now you can see one like this. Two bearish candle. I mean, I want to see two bearish candle close below this. Then we can have retracements of another one again, like this. Another retracement like this. So this is the first confirmation you want to see. Do you understand what I'm saying? The first confirmation is that you want to see two bearish candle. As far as you can see two bearish candle close below the bullish candle before the retracement. That is the first confirmation you want to see that will validate this higher low. Do you understand? Good. And then the second thing you want to notice is that we cannot see an higher high created in one candle. If you see, after this retracement, if you see a large bullish candle that closes above this, just one bullish candle after this retracement that closes above this, and then we have something like this, look at this. We cannot call this an higher high. It is going to be invalid. I want to try and draw something like canceling. Okay. Are we seeing this? So basically, let me repeat myself. Let me repeat myself so that you all will understand what I'm saying. To validate an higher high, the first thing I want to see is I want to see two bearish candle close below the last bullish candle before the retracements. And the second thing you must notice is that you cannot see an higher high created in one candle. If you understand what I'm saying up to this point, drop some 5 on the charts. I will go to the live chart and I will show you series of examples why this thing is like this. Talking about validating an higher high, validating an higher low in a bearish market. If you understand what I'm saying, drop some 5 on the charts. Okay, let me explain again. All right, now I taught you that, for example, in a bullish market, what you want to be seeing, that is why I really don't want people to, to miss this class, honestly. Like, I really don't like people missing classes, because honestly, people think that, oh, what's the next thing that they want to learn? They don't know that there are still more deeper stuff that they can, they don't understand. But all right, this is what it is. So let me start again. Now, this is an higher high, this is an higher low, this is an higher high, this is an higher low, right? Good. So for us to validate this higher low, I'm talking about the higher time frame, like the daily. Do you understand? So like the daily, we're talking about the daily now. Do you understand? So we're dealing with higher time frame structure. Because where do you want to be checking directions? Where did I say you all will be checking directions from? The daily, right? So that is where we want to check where our, the direction of the market will really, give us more confirmations for us to really decide what we are going for. So right away, now I said, for us to validate this leg, this particular leg, I'm talking about this leg. Do you understand what I'm saying? This leg, I told you that after smart money takes profits, you see some, some retracements. So now, in seeing this retracement, the first thing you want to see is the bullish candle. The bullish candle, in my chart, this bullish candle is white in color, right? It's white in color. Do you understand what I'm saying? It's white in color, And then the next thing you want to notice is that you want to see two bearish candle closes below this. And then the next thing, your confirmation checklist, like I taught you all, is that we cannot see an II created in one candle. It means that, for example, for us to see an II, there must be 1, 2, 3, 4. But you get what I'm saying? You can see two candles. The two candles that can be coming like this. Two candles that can be coming like this. Let's say this is the bullish candle, the retracement candle. 1, 2, 3, 4. But when we see just one bullish candle close above this one, this one. I'm talking about this one. Do you understand what I'm saying? When you see this bullish candle, this particular one, do you understand? This bullish green candle closes above this one. It is an invalid II. Are you getting what I'm saying, fam? Do you understand what I'm saying? Like, it's an invalid II. So when you see stuff like this, you don't want to be playing informations like this. Personally, what I do in this situation is like I look for bearish formation. Do you understand what I'm saying? I'll give you an example in volatility market. I'll give you an example in currency market. All right, let's go to volatility 75. All right, let me take you all to volatility 75. Let me just start from, let me see whether it's in this market. And let's just identify that, and then we can see how we're pushing it. Now, look at these trends. Now look at this. We all believe that this is the let's say this is the higher low. Sorry, higher low, right? Then we have the higher high, right? Now what I'm saying is that for us to call this an higher high, do you understand what I'm saying? Or even this one as an higher high, do you understand what I'm saying? We have to see, what are they calling it? Two bearish candle close below it. Now, this is the bearish candle. This is the bullish candle. Do you understand what I'm saying? And this is the bearish candle. So what I mean is that we want to see two bearish candle close. This is the first bearish candle. It's close. This one close, and then this close. And then the retracement, I mean, is this weak. It can retrace to this point, fine. But that's also confirming it. So right now, when we are counting the candle that close above this, do you understand what I'm saying? What we want to be seeing is consecutive candle that will close above this. You understand what I'm saying? Now look at this candle. Did it close above this one? This bullish candle, this previous bullish candle that had these two bearish candle, did it close above it? Can we answer for ourselves on the chart? Let me see. No. All right, I like that. So this is one of our confirmations. Do you understand what I'm saying? Look at this also as well, before market broke structure and then continue. Now look at this now. We had this bullish candle. Wow, let me clear my charts. Let me see if I clear my chart to affect all the trade setup that I'm actually looking at. But let me just see how to go. Okay, just give me 1 second. Now look at this. I'm talking about this candle, this bullish candle, this one. We had two candles, two bearish candles. And then look at the retracement. We had one bullish, two bullish, and then close. So we can call that an higher high. Now let's go further. Let's go further and let's go and check for more. Look at this. Okay, this is an higher high, higher low, right? Look at this. We had the first, bullish candle, two bearish candle close below it, and then we had the retracement. And look at the retracement on this daily time frame. We had 1, 2, 3, 4, 5, 6, 7. Before he broke this structure. Before he broke this structure, we had 7 consecutive candles. But now, let's keep going. Let's keep checking for bullish markets for us to confirm this. Look at this as well. Potentially, this was the higher high, right? In this market, this looked like the higher high here. Talking about these points here, right? Good. So, and this was the higher low. Good. So, based on this information, we had this this first bullish candle, and then we had two consecutive candles close below it, and then before this retracement. And then how many candles do we have before it break this higher high? 1, 2, 3, 4, 5, 6, 7. So this is a valid higher high. We're saying this, right? All right, good. So let me take us to another market. Which one is this? Okay, this is 10YS. This is 25. Let me go to the daily time frame. Let me see what you all are saying on the charts. Okay. Oh, sorry, my bad. Okay. Now, look at this bullish. Look at this was the higher high, the higher low, right? Now look at this first. Look at this first candle. Look at this first bullish candle, right? Good. And we had two consecutive bearish candles that closed below it before this retracement. And then when the bullish when the bullish retracement started, we had 1, 2, 3, 4, 5, 6, 7 closed above this, right? Good. Now let me take you to volatility. What are they calling it? Volatility 25, and then we move to the currency pair or shows. Okay, we are 25 one here. Let me check that too on the daily. Now look at this family. Look at this family. Now look at this. You know, what is the first confirmation? I want to see two bearish candle close below the bearish candle. I want to see two bearish candle close below the what? The first bearish candle. Now let's say this is the bearish candle, this particular candle, this one. This is the bullish candle. We want to see two bearish candle. 1, 2, right? Close below it. And then we had these retracements. And then let's start counting the candles that, you know, that retraced above this candle. You know, when it comes to break of structure, we consider the what? What do we consider when it comes to break of structure? Let me see somebody type that on the chat so that I will be sure you all have been studying and then you'll be following the class. When we want to consider break of structure, what do we consider? We consider the body and not the wick, right? Good. So basically, I count this candle 1 and 2, right? So it took 2 candles for this thing to what? To break structure. So we can consider this a valid higher high, right? Good. Now let's play. Let's continue to play. We had this also we had this break of structure. This higher high, then a higher low, right? We had 2 bearish candles that are closed, right? They are closed. You know, they are closed. This one bullish candle. We had 2 bearish candles that closed this one bullish candle, and then we had 2 consecutive that gave us the higher high. Valid. Let's go, fam. Let's go, fam. Let's go, fam. This one as well. We had 2 bearish candles that closed behind this particular bullish candle, this bullish candle. Do you understand what I'm saying? 2 bearish candle. Are you seeing that? And then we had this retracement 1 and 2. We see that, right? If you are getting what I'm saying, drop some 2 on the charts. Drop some 2. Drop some 2 on the chart. Just keep following me. Another confirmation. Now look at this also. We had this higher high, right? Now look at the next higher high again. Higher low. And look at this. We had this first bullish candle. We have 2 consecutive, right? We even have 3, but the major confirmation is 2. 1, 2 that closed below this and this retracement. Look at the bullish that led to the break of structure. We had how many? 3. 1, 2, and 3. Good. This confirms this. Now look at this family. When we got to this point, this was the, this was the higher high and then higher low, right? Now look at where we're talking about. Let me see. Civelos, have you been in our classes? Have you been following what I've been saying? Did you join us when we started? If you did not join us, I advise you watch the videos. So basically what we are doing is that we are doing market structure. Do you understand what I'm saying? The topic of this class is what's even the topic again? Identifying structures. Like we're doing we are going deeper into structure. Do you understand what I'm saying? Like I really don't want anybody to bring me back, I beg, so that I will not get distracted. Just follow me. If you have any question, let's get to the end of the class. Thank you. All right. So like I was saying, when we go to this point, all right, we can see this. I'm talking about here. I'm here currently, right? We can see this bullish candle. Do we have two bearish candles that are closed? No, we didn't have. Do you understand what I'm saying? But look at this higher high. Do we see this, family? This candle was a smart money candle. It's closed this in one candle. It closed this higher high. When I saw this, I knew that this market was going to go bearish. Because in the confirmation of this, we cannot see an higher high created in one candle. Because basically this candle closed above this in just one large candle. It closed above this in one large candle. Do we have two bullish candle? No, just one bearish candle. So this, this can be tagged as a what? As an invalid higher high. Are you following me? This is an invalid higher high. Now let's go again. Let's keep going. Let's back test. Let's back test. Mr. Wole was saying something. He said he was talking about a particular man, Andrew, that he did, years of back test. Now, okay, this is where this market started. All right, let's look at this. Let's look at the bullish rather. Then we go to the bearish. Okay, we've actually seen this. Let's go to 75, where we have a lot of bearish markets. I just follow suit. I told you all that the daily is for direction. You understand what I'm saying? The daily is for direction. All right. So with this being said, let's just keep going. Let's keep pushing. Let's keep pushing from. Now look at this again. Higher high. Two bearish candles close. Look at this tracement. Look at the candles 1, 2, 3, 4, 5. Valid higher high. Yeah, as well. Higher high. Two bearish candle close below. And then we had this, 1, 2, 3, 4, close above this. And then, look at this. Look at for these days. Do you understand what I'm saying? Some people that be thinking that our market has, the real range of this market was from this higher high. Though we are still going to go to range. This was the higher high. It's just that the market was so bullish for these days. The real range was this higher high. Yeah, this higher high and this. Some people would have, what are they calling it? They got off guard. That's why smart money will give you sometimes buy to sell, sell to buy. If I had seen this market, you understand, this is like last year, very early last year. You understand what I'm saying? Yeah. So yeah, it is what it is. Look at this now. If I am playing this information, do you understand what I'm saying? What I will keep in mind is that this market is still a bullish market, but there were consecutive days of bearish formation just to come out, just for smart money. Do you understand what I'm saying? To come and mitigate this candle here, this candle, this particular candle around this point. This is an institutional candle, not for this class. And market still did not break structure. But look at this on the daily. We had this, okay, we had this break of structure, break of structure, break of structure, like that. But once you get to, this point, that's why this type of market play is a weekly retracement. You understand what I'm saying? If you go to your MetaTrader 5 and you click on the weekly time frame, you'll be able to see that this candle, this flow was a weekly buy candle, and then the retracement was coming down like this. The retracement was coming down like this. So you get what I'm saying? So now let's continue our research. Okay, we call this higher low. How many candles do we have? Two bearish candle. Then we had how many candles? Just one candle. So this is an invalid higher high. Do you understand what I'm saying? Invalid higher high. So look at this again. Two bearish candle. We have how many candles? 1, 2, 3, 4, 5. Valid higher high. Two bullish candle close below. And then we had the retracements like this. as well. Here again, look at this. Look at this family. Look at this. When price go to this higher high, you understand what I'm saying? This point, at least you can see this first bearish candle. We didn't have two. Sorry, with this first bullish candle, we didn't have two bearish candle, but we have an higher high one that was created. And look at what market did. I guess started pushing down, pushing down, pushing down. We've seen that. I guess started pushing down. I guess started pushing down. So basically, I told you that market structure is the heartbeat of the market. It is the heartbeat of the market. If you understand market structure, honestly, on every time frame, you'll be able to, what I do basically is that I keep in mind the structure of the higher time frame, and then I can always play buy or sell. Personally, I can actually play buy or sell within all this, but majorly I like to play the direction of the market. Do you understand what I'm saying? So this is what the knowledge of market structure will give to you. Now let's go to the pair. Let's go to the pair. Today is FOMC. Then we're just keeping watch on the market. We're still waiting for the what are they calling it? We're waiting for the news to give us the expected value of this FOMC. I don't know, is it out already? No, it's not out. So we're just keeping an eye. FOMC is very, very volatile play of the market now. I think it was USD JPY. Let me show us. Was it on the daily? Okay, yeah. Now look at structure. Let's go from the weekly first. Okay. What is FOMC? FOMC is a particular news that is being released, in the US, like just an economic news. Do you understand? Saying that talks about where to set interest rates, Federal Open Markets Committee, like that. So it's there's usually a new stuff like that. Just stay patient. I'm just trying to the fundamental traders in the group, like my boss, like just to share some things like that. So look at this market. This market has been bullish. Do you understand what I'm saying? On the weekly, but we all expect that after this bullish, there will be a bearish, something like this. What are they calling it? At least there should be a bearish retracement, right? I'm expecting something like this. Well, that's why we are looking at bearish, bearish daily, bullish weekly, right? Now look at this. Now let's do the market structure play together. Now from here, oh sorry, my bad. Market structure. Now look at this farm. Now we have this higher high, higher low, right? You see this, right? Before this higher low, we had how many bullish? 1, 2, 3. Then this. And look at this. 1, 2, 3. Look at this. 1, 2, 3. And look at this. And then, but look at this point here. Look at this place here, fam. We just add this one candle. Do you see this, fam? Like we had this one candle. Do you understand what I'm saying? That's just closed above this. Do you understand what I'm saying? That's why I'm actually anticipating more bearishness. Do you understand what I'm saying? I'm expecting more bearishness on this candle, on this, what I call it, GSD JPY. So if I'm looking for opportunity to buy on this market, then I'm actually doing myself. And then this is also in line with what I call, the dollar index. Do you understand what I'm saying? Like dollar index. I know some of you have not known about dollar index. Dollar index is a particular index that, that helps us to make track record of most of these currency pair. You understand what I'm saying? Like, for example, if the dollar index is bearish, you understand what I'm saying? You want to be seeing bearish USD JPY. I'll get there. I'll show you all why I'm confirming that thing is going to be bearish. Do you understand? So why I'm seeing that thing is going to be bearish. I'm coming. Just be moot. All right. So study this relationship between USD and all right. Yeah, correct. I like that. So let me show you the dollar index. Okay, this is it. Now look at this farm. If you look at the dollar index, let's check 4 hours. Okay. The 4 hour is looking like it has broken structure. Not really like that, but higher high, higher low. Look at this higher high, higher low. And we have this higher high, higher higher low. This is higher higher low, right? Because it closed above this. Good. So we saw this break of structure, and then one thing I want to see today through the aid of what are they calling it, FOMC, that I want to see dollar index going down low. Do you understand? And if the dollar index is going down low, the reaction will also be visible in this point. So I look for opportunities to sell depending on what the news is going to look like. Also, that is how it looks like. So let's just play the market structure. Let's leave those correlation. Those are, what are they calling? Those are phase 3 topics. Sometimes I just used to laugh. Like, look at what brokers do. Somebody was asking, does broker manipulate? Look at currency pair. Let's measure this. Don't shout, oh. Don't shout. How many pips is this, family? He said, I like the way you laugh. Oh. Like, how many pips is this, family? And you can imagine somebody that is using this broker. What would have happened to the person? Look at currency pairs dealing with. This is like 1,000 pips. But let's check another broker. Let's check another. Let's use GAU, right? Let me use FXTM. Okay, you will not see anything like this there. All right, so we can see this, right? All right, now let's do our market structure play, right? Good, let's go. Okay, so look at this. Higher high, higher low. Do you understand what I'm saying? Higher high, higher low. Higher high, then we have the higher low. Are we seeing this? So basically, when you see these things, you keep the at the back of your mind that validating your higher high, you need to see 2 bearish candle close below the last bullish candle before the retracement. And then one of the things you want to keep at the back of your mind is that you cannot see an higher high created in just one candle, in just one bullish candle. You must see consecutive bullish candle. Do you understand what I'm saying? That would actually validate that on a very, very strong time frame, like the daily, the weekly, and the likes like that. Let me show you something. Let me show you something, family. Let me show you something. Why I'm saying this on volatility 25-1x. Why I told you all that, the higher time frame is more powerful than, the smaller time frame. Let me take you to volatility 25-1x. Let me show you something. I don't use Forex. I use Prosperity FX. I have an account with Prosperity FX, but my team, we don't use Prosperity. We don't use a broker. What we use is Prosperity FX. So now look at this, everybody. On the 4 hours time frame, I haven't seen this information yet. Do you understand this information? Are we together? I haven't seen this information. Are we together now? I went to the 4 hour time frame, right? Good. Yeah, Prosperity FX. Yeah. Now look at this, family. Fine. We caught this, right? Like at least this buy. We caught this buy because at least it gave us our 1 to 3. Good. So, but the overall was that I checked the daily time frame that gave us an invalid higher high. Fine, it still gave us a little bullish, right? But I was very careful to just take my 1 to 3 and I ran away. Good. Now look at this. Fine. Higher high, higher low, higher high, higher low, higher high, higher low, right? But what happened? Markets came to to fill a particular institutional candle, of which is part of this phase 2. I'll not be mentioning right now. Just stay hungry and stay focused. And then market started reversing. And then it cleared this and then give us a break of structure. From there, give us a break of structure, lower high, lower low, lower high, lower low, lower high, lower low. And then what we see here again? What happened here? What happened here, family? Who can tell me what happened here? Who can tell me what happened? Lower low, lower high, lower low, lower high, lower low, and then who can tell me what next? If it were before, some of you would have said lower low, lower high, lower low, lower high, higher high. But right now, based on the information and the knowledge you have, there is a break of structure, exactly. So now, where is our break of structure? Do you understand what I'm saying? Break of structure happened obviously at this point here, right? So now you can always put your BOS, right? Good. So now this same thing, this validating higher market structure also applies to a bearish formation. Do you understand what I'm saying? Applies to a bearish formation, and then we move to our trading range. Do you understand? Then the trading range. Now, what are the confirmation checklists or the rules for lower high? The first thing you want to see is 2 bullish candle close. Do you understand what I'm saying? Above the last bearish candle before the retracement. Are you writing? Are you writing? After this, we are going to move to range. So let me repeat again. Two bullish candle rules for lower high. 2 bullish candle close above the last bearish candle before the retracement. What it means is that on from here, if this is the last bullish candle, you want to see 2 bearish candle close, or sorry, 2 bullish candle close. Do you understand what I'm saying? And then this retracements. I will explain myself. So here will be red candle, 1. And something like this too. Let me make this red. Oh, my bad. Like, I'm sorry. Thank you. It's my bad. I'm used to white and black. So that's why I'm just like, what is going on? Thank you, Ngozi. Okay. Right? Okay. Okay, red, green, green. Okay, thank you. So now, the first thing you want to see is that you want to see 2 bullish candle close above the last bearish candle before the retracement. And then, likewise, you cannot see 1 bearish candle close like this. What you have to see is that I want to see consecutive candles, consecutive bearish candle that will just fall. And then, that is how it looks like. Right? Now, let me show you something on this point. Yeah, let me show you something here. Okay. Now, do you understand this illustration, this one here, before we go to the live chat? Do we all understand? Let's drop some 5 if we all understand. Let's drop some 5 before we all, so that I'll be sure we all understand. Let's drop some 5. Honestly, like I'm really happy that you all are plugging into the chat and then to this call, and then you all are really learning, and then your hunger for this knowledge is really making me very happy. Yeah, it's full set 3.5. All right, okay, let me explain again. Now the first confirmation is that I want to see 2 bullish candle close above this bearish candle before the retracements. Now, I hope you know that this retracement that I'm talking about is weak, can be a weak. You understand? It can be a weak, and then the next thing you want to see is a fall during a downtrend, right? Now, so this is the first bearish candle and then we had these bullish candles that ended up going up, right? Then one thing they want to see is that we don't want to see one bearish candle close, close this in just one candle. It's an invalid one. Do you understand what I'm saying? Now let me take you out to the 8-hour time frame. Let me take you out to the 8-hour time frame. Okay. No, the daily. Okay, let's go to the daily. Okay, let's go to the daily and then do this confirm. Oh, sorry, my bad. Let me see what you all are saying. You see, oh my, there's so much info. I think when I just get to phase 2, I will just end it. Maybe later on. Do you all agree? We've not gotten to seasonality, open interest. I'm telling you, like there's a whole lot. Seasonality, open interest, where I'll show you seasonal chart, like 20 years charts of some pairs like gold, silver, British pounds and everything, like 20 years ago, and then 20 years into the future, and then how they can actually, give us some confirmations for what is happening right now. I'm just laughing. Let me see a bearish market. Which pair is more bearish? Okay, now let's use this. Let's use volatility 10. Let's use volatility 10. Honestly, like if you are done with, like when we are done with this phase 2, honestly, at least we all should be doing chart markup. Trust me, like honestly, like you all should be doing chart markup. The phase 3 is just for more deeper stuff like that. But basically, you should get the mindset. Okay, volatility VIX 1. Okay, 75 miles. Now look at this farm. This is the first one. Then we had 2 bullish candles, and then we had, consecutive ones. So this is a very valid higher high, right? I'm talking about this place, right? I'm trying to take this thing off. This place, right? Look at this. So we had this 1 bearish candle, 2 bullish candle close, and then 4 this retracements. How many retracements did we have? Hope you know that this was a break. This was a break of structure to the downside, because this candle, this bearish candle, with a body closed above this, below this rather. Let me use my wick. Let me bring my wick, my line chart to confirm this. Right? See, did it close below it? I think we are relatively equal lows, right? Let me be very careful and watch. That's why you have to be very, very careful and watchful in scenarios like this. Let me bring this. Get close. Somebody should help me. Let's watch this thing together. Did it close below it? Oh yeah, let's agree. I'm talking about this one. Because did this one close below this one? Let's check it together. Yeah, like, what are you all saying? Let me see, what are you all saying? It closed below it. Did it close below it? Or was there a break of structure into the downside? Like, did it close below it? Yes, exactly. Yeah, thank you, Tosin. Thank you. Yeah, thank you, Tosin. So that's what we always want to check. Like, we always want to be careful, right? Like the body of this candle close. Do you understand what I'm saying? Now, so this actually gives us our confirmation. So this was what? Lower high, lower low, lower high. Do you understand? And then the lower low. So let's check for more bearishness in the markets. Let's check for more bearish markets. Now look at this. We can call this lower low, lower high, right? Now let's validate this. We had this first bearish candle. How many bullish candle? 1, 2, 3, 4, 5, 6, 7. So this is a valid lower high, right? Good. Good, right? So very, very, very probable. So you can do your back test over and over again. You can do your backtest over and over again and confirm this. Okay, somebody said volatility is 75 1x. Let's go there. This market is the opposite of volatility, 75. Whereas this one like bullishness. This one likes bearishness. Look at this. Let's start from here. This was the lower low, lower high, right? So we can call this. Let's start from this candle. And this one. This was the last. So we had 1, 2, 3, and then we had this retracement. I've really not seen one bullish or one bearish candle just close like this. I'm still trying to search out for that. No. I'm sorry, no. Basically, these things we are doing, we are using it for higher time frame validations. We are not basing all this judgment on lower time frame. Do you understand what I'm saying? So that when we see this on a higher time frame, it will change our perspective. I told you that I saw that confirmation giving us an invalid higher high in volatility 25 1s, but in 4 hours was still giving us a very good confirmation. But I told you that the higher time frame still supersedes that 4 hours time frame. Do you understand what I'm saying? So at that point in time, I was not targeting the highest high. Do you understand what I'm saying? I was not targeting the highest high. I was just trying to be careful on the trade. Do you understand what I'm saying? I was just trying to be careful on the trade. What I'm saying, look at this again. The 4 hours, right? The 4 hours, the previous all-time highs. You see that? Now let it load. Okay, I don't know why this thing is taking time, but I hope you understand what I'm saying, right? Good. Like the 4 hours was giving us a valid higher high and higher low, but the daily was giving us an invalid higher high. So what will you do at that point? Do you understand what I'm saying? Look at this. This is the 4 hours time frame, right? Oh my. Okay. Now look at this. When the market was here, it truly gave us a valid, higher high, right? Because you saw one bullish candle. Do you understand what I'm saying? And even look at this smart money play. There was a liquidity that was cleared here, and then smart money came to mitigate from this candle pop. They refused to give us a break of structure to the upside because of the fact that what? The daily time frame, being a directional bias time frame, did not give us a valid higher high. We're getting that right? Good. Let's get it, fam. All right. So where am I? 75 1s, right? All right. Look at this. Lower low. Then we had this lower high. You understand what I'm saying? Then the market broke structure. Look at what I also taught you yesterday. Every of these retracements always happen above the what? Who can type it on the chart before I do that? Above every of the retracements of a lower high happen above the what? Dash fib level. Dash fib level. What fib level? What fib level? I want to know those people that have been following before I draw it. The retracement of the lower high always happen above the dash fib level. No, not correct. Above the what? Above the 6-1 is very correct. Now look at this. Let's confirm this. Let me draw my fib. I've really not done this, but you confirm this. Do we see that? Look at this. Tap the 618 and then it started reversing. See that, right? See that, right? I draw it body to the body. And draw it. Now I told you can take your fib body to body. We are dealing with this one. We are dealing with this one. Sorry, all questions stay after class. And if you are not in the class, please go and watch the video yesterday to really understand it. I'm just trying to just combine everything together. Are you seeing that? Are you seeing that? Above the what 618. When it was the week to week, it was exactly at the 618, right? Good. So let's do more of this again. Look at this again. Let's draw a fib. Let's draw a fib. Lower low, lower high, lower low, lower high, right? Let me draw my fib again. You see that smart money likes to mitigate anything, the 618 like that. Let me do body to body. Are you seeing the body to body? Exactly at the, we have to be careful so that it will reach the body. Exactly. Good. You can see 618. You seeing that, right? Okay. All right. So you seeing this, right? Good. So this is how we combine everything together as the journey takes us. So at least I've been able to explain the fact that how we can always validate an higher high and higher low in a very, very strong trending market. Do you understand what I'm saying? How we can always validate our higher high and higher low in a trending market. Look at this market too. Look at this family. Okay, see this family. Higher high, higher low, higher high, higher low, all valid, right? All valid, right? All valid, right? Higher high, higher low, higher high, higher break of structure. Market broke this structure because of this body. Then we add these words. What are the calling it? We add this retest, right? Do you understand what I'm saying? I will teach you why this was a point of retracement. You understand what I'm saying? I'll tell you why the market retraced on this point here. Because hope you know that in former years, you understand what I'm saying? You have not seen any printing, right? Did you see any printing around this side? Did you see any printing around this side here? Is there any printing to the back that you can say, oh, that's a support? Why the market reversed from this point here? Do we all see why this point, made a reversal in this point? I know my mentor will really understand what I'm saying there. They understand that's what they call a what? A quarter theory and a quarter point. Do you understand what I'm saying? It's a quarter point. I don't think it's part of the bootcamp course. Is it part? I don't know. I've forgotten whether it's there. So let me draw my fib level to see the reaction of price. Okay, it came to mitigate from 0.5. So it's also making sense too. This is what the market geometries like to take their entry from. So okay, it's good as well. So oftentimes they are not, they will always reverse from anything from the 618 and above. So let's get it firm. Okay. So currently, what's the market of this? What's the trend of this market? Who can tell me the trend of this market right now? Who can tell me the trend of this market right now? And what are we going to be looking for? Who can tell me the trend of this market? Who can tell me the trend of this market? Really? Downtrend. Wow. Downtrend. Yeah. Downtrend. Why is it downtrend? Look at this family. Why is it downtrend? We have the higher high, higher low, higher high, higher low, and the higher high. Then what happened next? What happened next, family? What happened next? What can we see next? What do we see here? It didn't give us an higher high, right? Market broke structure, VOS new, HA didn't form. All right, all good, all good. So basically, we can see this as a very, very clear break of structure, right? Good. Good. So this is very, very clear. So what opportunity are we going to look like? Now, market has given us a break of structure, right? So we always see rally such like this. I don't know what the smart money want to do, but if the market continues to be bearish, that is what the formation will look like. Are you seeing that? Are you seeing that? All right, so that's how it looks like. So this is a break of structure, and that is how it looks like. So let's continue. Now, we have to look for sell after a retest, or exactly. So basically, I understand. Let me just see what the 4 hours is looking like. Let me see what the 4 hours is looking like, whether we can just okay. 4 hours is still bearish. Before I can see my scalping, do you understand what I'm saying? If you're still asking that question, do you want to start trading now? Or do you want to wait when you're done with the class? Are you following what I'm saying? Like, potentially this is still bearish on the 4 hours. We're seeing this market is still bearish on the 4 hours like that. And then basically still keep my, but when you take time frames like lower time frames like 30 minutes, like that, market has potentially broken structure there. So what I want to see before I can have more potential to really take this market up is my, what are they calling it? Is my, don't worry, it's my like I said, it is my break of structure on the 4 hours time frame. But you can still see this liquidity was taken out. This liquidity was taken out, right? Because the liquidity was taken out. Let me draw it very well. Let it meet here. If you check the 1 hour time frame, you see how the liquidity was swept. Yeah. So liquidity was taken out. Let's go to the 1 hour time frame to see how it looks like. So look at this farm. So what can we see right now? What can we see right now? Pure IC. What do you mean by IC? What do you mean by IC in this context? Lower low, lower high, lower low. The market broke what? Market broke structure. This is what I want to see. This is what I really want to see. So potentially I'll keep an eye on this trade. Let me see. I think Mr. Wally is seeing what, I can't really remember. Like I would check. Yeah, sometimes I think he was seeing. Let me ask him. Like let me just kind of almost him. I think he has a setup for the pay. You know. I know some of us are really hungry for a setup.
Yeah, I actually have a setup for V751S, but
Okay,
yet the level I'm expecting to have a breakout has not been broken.
Okay.
Price has been rejected from there, and I'm just waiting until the level is broken because I have several like 2 scenarios that can actually play out.
Okay,
Is either what's it called? 15101
Okay, for a buy, right?
get
Wow, the network is really
gets broken,
okay.
and we have a retest of that, and price keeps going down, or price returns back to the and retest that area, then waiting for price to actually show me the way before I call the sell.
Okay, I like that. So potentially on the 4 hours is still bearish. Keep that in mind. Some of you are like, it's time to, 4 hours is still bearish. 1 hour is what? As broken structure. So we want to potentially wait for the higher time frame to give us more confirmation, more confirmation. Do you understand what I'm saying? Like that's how it looks like. So potentially, if I see, if I see the market pulling down to maybe this 1 hour IC, like how Ngozi says, do you understand what I'm saying? I can look for, potential, market is probability. Do you understand what I'm saying? The 1 hour can lead to the 4 hours break of structure. Do you understand what I'm saying? Because this is why I'm anticipating the buy, because on the daily time frame, market has broken structure. And then when we see that break of structure, we are expecting a retracement. What we are trying to do, we are trying to buy to sell. So if this gives us a good potential, at least, this point, this 50% candle can be a good point to, buy, and our stop loss will be below this candle. And I think is it up to even 50 cents? I don't think so, because velocity 75 1s is very, very small as a pair like that. So this is what I'm potentially looking like. Yeah. So basically now don't let me divert us to entries and the likes like that. Don't even ask me a question about how did I get my entry, because we will get there. So basically, let's talk about trading range. Basically, okay, let's talking about trading range. In an uptrend, what we see is like higher high, higher low, higher high, higher low. So basically, what is our trading range? Our trading range is from this swing high, this point here, and this point here. That is where we want to play our information. Do you understand what I'm saying? This is where we are playing our information from, this swing high and this swing low. So that we are very, very focused not to mind any distractions. Sometimes you can see some distractions. You can see some distractions. Now you see people are already dropping signals for the GU, and I told you like GU is going to look like buy, because if the dollar index is what bearish, we look for GU. So you get what I'm saying like that. So we'll get there where we'll do those lectures and the like start. So now look at this. Now we can see this. You can see this. You understand what I'm saying? Some people will be seeing some things like this. But you don't want to be caught off guard. You have put your mind that, okay, our trading rate, no matter how it's coming down, like that, is from this swing high to this swing low. So basically, if I ask you, if I give you a classwork and I like, okay, go and identify the trading range in the current market. For example, this trading range, okay, higher high, higher low, higher high, higher low. Do you understand what I'm saying? Higher high, higher low, higher high, higher low. Do you understand what I'm saying? So what is my trading range? It is from this swing high, this swing high. You understand? Some people would have thought that this is a bearish market, but this is actually a bullish retracement. Because if you check it very well on the weekly, you understand what I'm saying? It is still what? It's still bullish. You see this, right? And then this is our what? So market can do anything. It can come, it might not reach the higher high and start reversing back and break structure. But potentially, do you understand what I'm saying? This market is still a bullish market. So this is our trading range from this swing high and this swing low. Do we all understand? Let me show us in the market cap. So basically, when I saw this market break structure like this on the 1 hour, so 1 hour trading range is like this. Okay, look at this lower low, lower high, lower low. The market broke structure. So 1 hour trading range is this point here. You understand what I'm saying? This point here, here, and here. Do we all understand? That is potentially our trading range. Do you understand what I'm saying? What are you saying, Ngozi? I don't understand it. Are you following me, family? So all these things are just noise. Jigizu, we always call them noise. Jigizu is actually is an educator, somebody I really respect so much. You can check him on IG and follow him as well. He has a lot of values. Look at this. He calls this noise. So basically, these are our trading range. Do you understand? So now, for example, let me draw this. Higher high, higher low, higher high, higher low. So basically, this is our what? Our trading range in an uptrend. So you can be seeing some things like this. You understand what I'm saying? So markets will always come and give us that discount price where we always take our buy from. But some people have been what? Have been taken out of this market because you would have been giving false ranges. Do you understand what I'm saying? Like this one is a false range. Look at this. Let me clear all my screen. Let me clear all my screen. Do you understand what I'm saying? Let me clear all my screen so that you see what I mean by a false range on this 1 hour candle. Because we are dealing with very higher time frame. Okay, I understand you. Yeah. I understand what you're saying. I'm just trying to do an example on this 1 hour time frame. Do you understand what I'm saying? We're trying to check for entry. We're trying to check for entry. So now let's play this market structure. Yeah. This is the lower low, lower high, lower low, the market broke structure, right? So where will be our higher low? We are looking for our higher low, anything below the what? Anything below the what? Below the 50%. Right? But all these points, they are, they are invalid. Do you understand what I'm saying? All these ones, they are not the valid higher low because of the fact that, we want to see a very higher time frame give us the break of structure. Do you understand what I'm saying? So 1 hour has given us a false range. Look at this. Hope you know that even in the 2 hours time frame, we've not seen a break of structure. Do you understand what I'm saying? We have not seen a break of structure. We have not seen a break of structure to the upside to confirm this, the buy. But 1 hour is giving us, look at this. Has this broken structure? No. So potentially markets can just come and mitigate from here and break structure on this 2 hours time frame. Do you understand what I'm saying? But potentially that 1 hour looks very, very good to me. That 1 hour looks very good to me. So if you don't understand what I'm saying, what I'm explaining is the range, the trading range, that in an uptrend, in a very, very big time frame, like the 4 hours, do you understand what I'm saying? And the daily, you always want to play the range of the bigger time frame, like the 4 hours. Do you understand what I'm saying? The 4 hours. Do you understand what I'm saying? The 4 hours trading range. But within this trading range, do you understand what I'm saying? The 1 hour will be giving you noise. The 1 hour will be giving you noise. All these points here, you'll be seeing different type of noise like giving you false range. You'll be seeing another higher high and higher low again. Higher high and higher low again. Before market potentially come and mitigate off from this point here. Do you understand what I'm saying? Before market comes to mitigate from this point here. Are you getting what I'm saying? Before market comes to mitigate off from this point here. Are you getting what I'm saying? Okay. No. I'm not talking about that one. I'm not talking about that one. So this is what we call by range. Do you understand? This is what we call by trading range on a very bigger time frame. So if you are looking at the 4 hours higher high to the higher low, the 1 hour will be giving you different range that are not the real range. Now let's confirm this. Let's confirm this in volatility 75. Oh, sorry. Let's look at this family. Let's look at this. All right, this is the 4 hours range, right? Coming. This was the low. All right, this is 4 hours. Okay, lower low, lower high, lower low. So this is the previous lower low, right? Previous lower high, right? And then the lower low. We agree. If we agree, drop some 5 on the charts. So basically, our trading range is from here, this point here, to this point here. Do you understand what I'm saying? Our trading range is from here to this point here. But if you go to the 1 hour time frame, what you'll be seeing is something like this: higher high, higher low, higher high, higher low, higher high, higher low, of which we agreed. We saw that in the 1 hour time frame. 4 hours is still bearish. Are we together? 1 hour is already showing us breakout structure. What do you want to wait for? You want to wait for the 4 hours to give you to be in line. You understand what I'm saying? Because some people used to lose in Forex because of the fact that they follow different time frame. You understand what I'm saying? They follow different time frame. Some people will just go and trade from the 1 hour noise. Whereas the 4 hours is obviously looking bearish. So like my mentor is still staying on that bearish because of the fact that the higher time frame is still bearish. Do you understand what I'm saying? But potentially, I'll keep an eye on this trade. This can lead to the 4 hours breakout structure. It is what it is. But honestly, if I lose this trade playing this 1 hour time frame, because of the fact that I'm keeping an eye on the daily that is trying to reverse back to where it broke structure to. Do you understand what I'm saying? This 1 hour can lead there. Do you understand what I'm saying? And it might not be probable. So if this does not give me my break of structure by it's coming something like this, something around this point, and then breaking structure, if it still continues to go bearish and it hits my stop loss, I will wait till when it breaks potentially this structure on a bigger time frame, and then I will still continue the market. But up to then, I still remain bearish on volatility 75 1x. Do we all understand? 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 I want to see you all communicate with me on the charts. Do we all understand? If you understand, drop some 1 on the charts. If you understand, drop some 1 on the charts. This is 1 hour 20 minutes. So we've been, dispensing this. Somebody say my head. Because you are big, just calm down. Calm down, big. I beg, calm down. You're making me laugh. So if you have a question, let me just unmute you, kindly unmute you right now. But honestly, if you watch the video again, I promise you understand what I've said. You understand everything. But I know that some people here have really, really, really understood. It's very, very phenomenal. So if you have a question and you want me to unmute you, please kindly just you can see that it's getting hotter. You can see. So just kindly, all right, let me see. The explanations is making my head turning on its own. Let me mute myself so that I will just stop laughing if I can. Now, what I'm saying at the overall is that I told you all that daily is for direction. We also use 4 hours for structure. So in a 4-hour structure, giving us an higher high, higher low, higher high, like how I explained here, when you see this higher low, or sorry, this retracement that is trying to give us this higher low on the 4 hours time frame, on the 1 hour time frame, the 30 minutes, the 15 minutes will be giving us noise. They'll be giving us different higher high, higher low, higher high, which is not the real 4 hours trading range of this point here. I'm talking about this point here and this point, because this is our previous low and high. But on the 1 hour, you'll be seeing something like this. I hope you know that this is a 4-hour structure. 1 hour will be giving us different points here. So once it gets here, it will give us, it will shift this, this market and start going up. Until then, if 4 hours is static already, like static that is not moving, right? I'm just trying to give an illustration, meaning that this is the 4 hours trading range. Do you understand what I'm saying? So this 1 hour will be giving us what I call, false higher high and higher low. Do you understand what I'm saying? It will be creating liquidity in the lower time frame to make people think that, oh, you can even see a break of structure on those time frames. But if it does not reach this 4 hours trading range, where our institutional candle is around this point here, the market is not ready to reverse. So once it hits this point here, that's when we'll start seeing the market reversing. Let me try and show you all. Let me try my best. Let me try my best to give you an example. Let me show you an example. Now, this is a 4 hours, right? Let me draw these points. Let me annotate these points here. I beg you all, please pay attention, please. Now look at this. Wow. Okay, let me send to the back. Now look at this, family. This is a what? This is a bearish 4 hours, right? Right? Good. Okay, no, let me show you this one. Now let me show you this one. Meaning that, for example, this is a 4 hours, lower low, lower high, lower low. Now I want to show you this retracement. I want to show you what is happening on time frame like 1 hour. Let me show you. Now look at this. Look at that it's looking. What is it creating on the 1 hour? It's creating higher high, higher low, higher high. Do you understand what I'm saying? Are you seeing that? One thing, though, I was still going to teach this in liquidity, like in liquidity introduction to, liquidity like that. But I'm just showing you trading range. Like the trading range of a bigger time frame is more important than the trading range of a lower time frame, because this will also keep us in check. That's why I always tell you, like, the market structure of a 4 hours is more powerful than the market structure of a lower time frame. Now look at this on the 4 hours. Basically, this was where we get the break of structure. This was where we get the break of structure. Market broke structure here on this trade, right? Market broke structure because of this what candle closing below this one. Do we all agree? But look at what is happening on on the lower time frame here. Even 1 hour, you'll be seeing series of lower high, lower low. Look at this again. I'm just showing you different time frame. So what it means is that until when I see a break of structure on the 1 hour that will align with the sell, that is when I will be ready to take this market. If you understand what I'm saying, please drop some one. Look at this 1 hour. Look at this. The 1 hour, look at this 1 hour trading range, 1 hour market structure. I mean, look at this, family. Then 1 hour broke structure to give us a sell, right? It gave us a break of structure of the sell. Now, what is the 4 hours doing? The 4 hours has broken structure, right? The 4 hours has broken structure. Good. 4 hours has broken structure here. It broke structure here. It broke structure here, right? Meaning that, for example, what we want to see is that we want to see the market giving us a low, which it has given us a low here, and then we shoot the market up. Do you understand what I'm saying? Are you getting what I'm saying? So basically, in this market has broken structure to the upside. Do you understand? So our trading range is from year to year. But look at what we are looking at. We are looking at, a way in which we can always take this market to this up here, to this point here. So potentially, if the market does not reach up here, do you understand? And from here, it starts breaking down, and give us, a break of structure again. What we look for is another opportunity to sell. So you don't need to disturb yourself. One thing that you need to keep in mind is that when the 4 hours is still bearish, don't go and be looking for what is not lost. If the 4 hours is still bearish, don't go and be looking, the 1 hour can still be bullish. So until when the 4 hours is the same thing with the 1 hour, then that's when you look for opportunities. That's what it means. If the trading range of the 4 hours is bullish, for example, you see a bullish break of structure, and then the 1 hour is still bearish, you want to wait till the 1 hour give you a bullish break of structure as well before you can start looking for trading opportunities. Do you now understand what I'm saying now? Do you now understand what I'm saying right now? I think I've made myself clear. If you understand what I've said, please drop some one on the chat. Perfectly. Thank you. Thank you. All right. So let me just give it to my mentor to just, give us some caps. He will really explain it. Okay, let me hear from others. You are trying. Okay. Please, I advise you watch the recordings again. You get it. I will show you.
Yeah, hello everybody. I want to believe we have learned something this morning, and talking about you having maybe a bullish a bullish structure on 4 hours and what's it called on 1 hour is not aligning with what you have there, I wouldn't advise you do this, except maybe probably you've mastered the hack to some extent. Like if you have 4 hours showing you a bullish action, while 1 hour is showing you a bearish um, move, that's if you understand the market. Or I shouldn't even bring this up so that I won't cause more confusion. Maybe I should just leave it to one side, leave it for now, so that I won't like what he explained before is even turning some people's head, let alone still chipping in something different. So let me leave this one for now. Just for today's class, just understand that you have to wait for both 1 hour and 4 hours to align before you make your decisions. Then when you have grown to a level of maturity, we can actually chip some other things in. So you get, don't always be in a hurry, because when you are looking at it that 4 hours, it can actually take maybe a couple of 1 hours to play out. But it's better you get the right entry rather than you quickly want to get into the market and at the end of the day you get stopped out. Just like this V75 1S, I actually dropped the setup, but I've not really gotten my confirmation, and I'm still waiting for price to actually show me the way before I will now make a proper decision, because I can see series of stuffs that can actually play out at that point in time. And one does have to be careful. I'll deal with somebody in the market. If you are not careful, you just see it's very sluggishly moving and bite to a particular direction. So you just have to watch it very well. So yesterday still setting. In this game, patience should be something that everybody should learn. Even if you are not so patient, you should start learning it now. When it comes to the Forex market, except you have maybe too much money that you don't even mind blowing $7,000 in a day, like we saw somebody posted in the group yesterday. Fine. If you have that, maybe you can also give me part of it. If you have so much that you are ready to blow in a day, I can send you my hazard so that you start crediting me. But if you don't have that, just make sure you keep your money, you guard it jealously, and wait for proper confirmation. When you have 1 hour and 4 hours aligned, then you are very sure that this is a more confirmation on whatever you are looking at. Is a more confirmation on whatever you are looking at. So everything is still about structure. If you have to watch the video, both the first video on market structure and this one, if you have to refer to it, watch it over and over again. Watch it over and over again so that you can still gain mastery. Maybe probably you missed some things along the way. By the time you watch it, like maybe 3 more times, you realize that you are actually piecing some information together that will eventually make sense. And that is the essence of we recording it, so that maybe for one reason or the other, you're thinking about something else while your class was on and you missed something, you can actually piece it together at the end of the day. So we told you, we are getting deeper and deeper every day. This is not the time to miss a class. This is not the time to miss a class. This is the time to actually be in the class, so that if there is anything you